Views regarding the economy, securities markets, or other specialized areas, like all predictors of future events, cannot be guaranteed to be accurate and may result in economic loss to the investor. Past performance is no guarantee of future performance. Any information is for illustrative purposes only and is not intended to serve as investment advice or as a recommendation, since the availability and effectiveness of any strategy is dependent upon your individual facts and circumstances. Individual securities discussed may be held in accounts where JGUA and or its employees have a beneficial interest. And with that, let's get to this week's episode.
Hey everybody, Dr. B here with John G. Ullman and Associates. This is our weekly market update for the week of January 27th. Thank you for joining us. If you're new, I hope you find this information helpful. And if you're one of our repeat customers, thanks for coming back. As usual, my goal with these videos is to try to use my background in economics to help you better understand the economy and the financial markets so you can make informed financial decisions. So with that said, let's get ready to hit the books and get up to speed on the markets. The big story last week, of course, was the Trump inauguration. The president laid out his agenda and his policy priorities through his inauguration speech, and the markets seemed to respond with enthusiastic optimism towards the beginning of the week, especially given the potential delay of the Trump tariff plans. Unfortunately, as the week progressed, it seemed that a lot of the optimism faded, and we now know that the first round of Trump tariffs may be taking place on February 1st. This is definitely an unfolding topic that we'll have to continue to watch. By the end of the week, Donald Trump and his wife Melania had both released their own meme crypto coins. Donald Trump had demanded that the Federal Reserve reduce interest rates as oil prices fall, and the Trump administration announced hundreds of billions of dollars in additional investment in AI and infrastructure. We're moving into the phase where speculation becomes actual policy and executive order. So these next 100 days will most likely be incredibly impactful and incredibly important to the economy and the markets. Switching over to the economy side, the Conference Board released their leading economic indicators update, unfortunately showing that the leading economic indicators had declined or had worsened over the last month. But when taken in conjunction with the exceptionally positive improvement in November, many analysts and economists believe that this was more of a correction in the index than it was an indication of a change in the economy. Also last week, the Unemployment Insurance Program update showed that the initial and continuing unemployment claims both increased. They're both currently at recent highs, with some speculation that the fires and the condition in California may have had a significant impact on the current increase of new initial claims. The Consumer Sentiment Report for January, released by the University of Michigan, showed consumer sentiment worsening and concerns about future inflation increasing. Unfortunately, it showed that inflation expectations have increased across all income and all age groups. Also last week, we saw the Standard & Poor's Global PMI report that demonstrated that economic activity has increased in the United States in January. Unfortunately, this increase was a combination of a cooling off of the red-hot service sector and a slight recovery in the manufacturing sector, which actually was the first increase in the manufacturing sector in the last 6 months. The unfortunate aspect in this report, in a lot of ways, was the inflationary pressures, which most of the respondents to the survey suggested have increased input costs as well as their selling prices, and in which case most survey respondents expressed concern that these inflationary pressures seem to be increasing. Switching over to the earnings side of our report, the financial sector continued to exceed expectations in the fourth quarter earnings reporting season for 2024. Last week, additionally, consumer giant Procter & Gamble beat earnings expectations. Netflix reported 19 million new paid subscribers and an exceptionally upbeat forecast for 2025. Additionally, we saw telecom giant Verizon post an exceptional earnings report for the fourth quarter and their highest subscriber growth in the last 5 years. We saw energy giant NextEra Energy benefit with a big boost to their share price, coming off a strong fourth quarter performance. And we saw Prologis beat most analysts' expectations for their earnings and revenues in Q4 of 2024. The stock market last week posted respectable gains across all three major stock indices. Despite the market being closed on Monday in recognition of Martin Luther King Jr. Day, we saw an exceptional performance early in the week, which tapered off as the week progressed. And unfortunately, we saw a slight contraction and stock indices falling on Friday, but all three major indices were still able to hold on to at least a 2% gain for the week itself. The Dow Jones Industrial Average posted the greatest performance, followed by the NASDAQ and the S&P 500. Yield on the 10-year Treasury note fell early last week, regained some of its momentum to about 4.7%, and then dropped again towards the end of the week, ending about 4.6%. Inflation and concerns about the new Trump administration and its economic policies continue to weigh on the Treasury market, as well as investors in general. Last week, Bitcoin swung between $100,000 and $108,000 a coin in a highly volatile and typically news-driven roller coaster of ups and downs. The price of crude oil steadily fell throughout the week as ongoing concerns about the ceasefire in Gaza, sanctions on Russia, and the new Trump administration's energy policies continued to drive speculation and concern for the future. The value of the dollar moved up and down a little bit last week, but overall it seems as though the market is waiting to see what the impact of the new Trump economic and trade policies may be on both the U.S. economy and global trade. The market for gold saw a strong week with continued upward pressures as uncertainty grows and concern about the potential global and economic impact of the new Trump administration's tariff policies continue to influence investors. Switching over to this week, we are right in the thick of earnings season for Q4 of 2024. This week, we'll see earnings reports from major companies Boeing, Lockheed Martin, General Motors, and Starbucks. We'll also this week see the beginning of the Magnificent Seven and their earnings reports, including Meta, Tesla, Microsoft, Amazon, and Apple. We'll also see earnings reports this week from consumer credit giants Visa and MasterCard, as well as energy giants ExxonMobil and Chevron. Around the middle of the week, we'll get another interest rate decision from the Federal Reserve, although at this point, the markets and the economists are both in agreement that we most likely will not see any cuts take place at this meeting. Later in the week, we'll see the first estimate for fourth quarter GDP, and we'll see the report for the December Personal Consumption Expenditures Price Index, which again is the Federal Reserve's preferred measure of inflation. Economists expect the GDP to have grown about 3% in the fourth quarter, and they expect PCE inflation to have risen just slightly in the month of December. Also this week, we'll see a significant amount of data in the housing market, to include new and existing home sales, the Housing Price Index, and reports on pending home sales in the future. Finally, in this massive week for economic data, we'll also see some information on production and inventories, including durable goods production, retail and wholesale inventories, and some international trade data towards the end of the week. Looking ahead even further into the future, inflationary pressures continue to grow, concern about a resurgent inflation continues to build, and as we move forward, inflation still looks like it'll be the key metric for economic success in 2025. Also, Donald Trump has stated that his tariff plans will start to take shape around February 1st. Most likely, this will be a long process filled with several policy and legal disputes and challenges, but it will be an impactful process that we will continue to watch closely. Last of all, we continue to work through the bulk of fourth quarter 2024 earnings season, with about 100 additional companies reporting their earnings next week, followed by about 60 in the following week. As we wrap up the reports for fourth quarter earnings, and as the picture for the new Trump administration starts to take shape, we will do our best to bring you the most important and the most impactful information here so that you can continue to stay up to speed on the markets. I want to thank you for joining me this week. As always, don't forget to like and subscribe if you found the content helpful. Also, check out some of the other great content here on our page. And don't forget to come join us again next week. Good luck, and we'll see you in the next video.